Good afternoon. George Cavaligos from Naked Trader. The slow rot in the Treasury market continuing. We got about 20 minutes before the pits close here, and the market's making its lows right now, 118.10.5 in the 10-year. I had highlighted the 118.09 level as a pretty good support level. That was the low from last week's unemployment number. The way it's trading, I'm not sure it's going to hold or be important support level. I'll leave the choice up to you. We've had a nice run here. You want to cover some shorts. Tomorrow's Friday. We have very little in the way of data tomorrow, except for Thursday's tomorrow. I'm jumping the gun. Thursday, tomorrow morning ECB meeting, a big event. Yes. Wow. No? I wish I was. Haven't had a cocktail yet, but it's coming up. There's your choices, guys. 118.09 the 10-year is last week's low. Choice is yours. Do you want to cover there? It's up to you. I'm going to let them run here. I think that we could be seeing a bigger move here. I'm looking at that 117.18 low on the June contract, and the bearish blood is boiling. We could even see the 116, what was it, 03 plus low on the rolling front month 10-year over the next couple weeks. Let the market run. Again, the volumes aren't great. We're not seeing massive selling. It's just this slow decay kind of trade here. I would be more inclined to buy a quick sell-off where we're hitting some stops, taking out some long positions. This kind of trade, I think, just lulls the long position to sleep and lets them be comfortable being long. I don't think this is great for the market. So we want to let this one run. I'm going to let it run. Take your choices here. I've been getting a lot of arguments back and forth, stocks, double tops, things like that. This isn't 1987 or 98 when the Asian crisis. This is more like 1979 when Jimmy Carter was president and the economy was horrible. We had 10-11% unemployment. But we also had inflation rates that were screaming higher. And it took a couple years, and it took Paul Volcker to come in and slam the door with much higher interest rates to stop the inflation. Even though the economy was weakened, employment was very high. Things are out of control. The Fed's putting out stories. I just sent it out. It's a long article. Maybe you just run to the conclusion and take a look at it. The Fed's trying to make the case that the long-term asset purchase programs are working by lowering market rates. Maybe they are. I'm not sure. But they're also causing inflation, and that's the problem. They're not looking at that as a problem, at least for us here in the States. I think it's a global problem, and they're not concerned about it or not concerned enough about it. And this thing could get out of control here. People are talking about these moves in gold and silver. I don't think we've seen the moves in gold and silver to the upside yet. They go parabolic here. The old weekly highs in silver at 41.50 from, what was it, 1980? Those will fall like dominoes. Gold will go over $1,500. The curve will steepen massively, as it already is here today. You know, again, we've been highlighting some of these curve trades, and people have been very reluctant to jump on these curve trades. I can't buy the highs. These are record highs. These are record times, guys. These are unprecedented times. Let's take a look at the emails here. I'll see if anything pops up on the close. I'll get it out tomorrow morning for sure. Have a great night.
Yeah, Georgie! Woo!